Hello and welcome. You're watching Your Trades on ET Now, a show where you get to know all the top stories and the headlines for today, and we'll also get you ready for tomorrow as well. I'm Shrishti Sharma, and with me is Anisha Jain. So let's get started. And firstly, let's have a look at how the markets performed in today's trading session. So finally, a relief rally coming in, Anisha, for the Indian markets, where Nifty was seen inching back above to that 17,100 level. A smart recovery coming in for the Nifty Bank as well, taking it above its 20-day moving average. And not just that, the recovery, especially in the Nifty 50, was we have to give credits to Reliance, high by around 3% in today's trading session, and seem to be snapping its 8-day losing streak. And that's on the back of a positive report coming in from CLSA, where they maintained their buy rating on this particular counter for a target price of 2,970 rupees.
And it was also the impact of the exclusive story coming in from ET Now, which had a rub-off impact on Reliance, perhaps because Geo Financial is all set to foray into the insurance space, and that is something that supported the sentiment. In fact, that's the reason Reliance was higher, and you had almost a 50 percentage contribution on the upside coming in from Reliance alone. Bank Nifty, as we pointed out, surpassed the 200-day moving average as well, and then you had a lot of other stocks like Sterling and Wilson Solar, which were in the news on account of that 2,100 crore order inflow. Unfortunately, unseasonal showers is what we have seen in many parts of India, right from Delhi to Mumbai as well this morning, and that had an impact as well when it comes to traffic as well as the daily, action and daily chores. But nonetheless, at least there's no big impact which is anticipated on the wheat production for the year. We spoke with an NITI Aayog member who said that they're not expecting a big impact on either the food inflation or the production, and that's something, some sort of respite coming in. But having said that, a definite day of good recovery for the market, 17,100, which we scaled comfortably and ended towards the highest point of the trading session. And this is coming ahead of the big event which is lined up with respect to the US Fed, wherein we will not only get the decision tomorrow with respect to rate hike or rate pause, but more importantly, comments from Jay Powell on account of the health of the financial system is something that we will look forward to. So lots really to watch out for when it comes to the Indian market. But technically speaking, how's the market plays? How does the risk reward look, given the fact that there was a lot of short in the system and the street was a bit worried given the fact that FII long position was very low in single digits versus FII shorts which were at record high levels. But Rajesh, does this mean that probably the market is poised for a bit of a recovery which could come in terms of a short covering as well? What's your take? Where the market is headed?
Yeah, good afternoon. So in today's trade, it's clearly we have seen some short covering action was there in the system, and Nifty and Bank Nifty has inched up, and Nifty managed to give close around 17,100 level. But looking at the overall picture for this March series, still shorts are there. Still the major short covering that can trigger only above 17,300. Most of the shorts are open around 17,300 level. So that level is very crucial for this March series. So until Nifty not crosses above 17,300, most of the pullback will again, meet to the supply pressure on the higher side. We expect some more pullback can be there in next one or two trading session towards 17,200, 17,250. But again, it's going to be a shorting opportunity because as most of the call writers are still there at 17,200 strike. Despite of this recovery, still call writers are adding their position, and most of the call writers are having concentration at 17,200, 17,300 strike. So this is a very important and challenging level for the market to cross in the pullback rally. On the other hand, yes, some call writers have covered their position for 17,000, 16,900 strike. For time being, we can see 17,000 could act as a good support area for next 2-3 trading session. If we hold those level, then there could be one possibility कि Nifty may attempt to recover further higher towards 17,250, 17,300 zone.
Okay, so very tricky situation. Expect the volatility to continue given there are a lot of open positions at 17,200 and 300 as well, though at least 6,900 is something which is at least a bit away for the markets at the moment. But Rajesh, getting stock specific, what are the top recommendations?
So we expect that ABB can continue furthermore upside from the current level, as the overall setup for ABB is looking very strong, And looking at the overall setup for ABB, we believe that this momentum can continue further higher and stock can move further higher from the current level towards 3600, 3700. So one can buy ABB for near-term target of 3500 to 3600 with stop loss of 3360. Another stock which we like, that is Ultratech Cement. Stock is continuously showing buying interest since last couple of weeks, and now in after today's move, we believe that this momentum can extend further higher from the current level. 7500 could be the immediate target for Ultratech Cement. So one can buy Ultratech Cement with stop loss of 70 to 80. The third stock which we like, that is from chemical space, that is SRF. If we analyze the overall setup for SRF, stock is now penetrating its 200-day moving average, and looking at the overall setup, we believe that SRF can extend its up move towards 2450. So one can buy SRF with stop loss of 2300.
Okay, so maybe the situation and the levels that the index is sitting at could be tricky, but buy recommendations coming in on three stocks from Rajesh. With this, we'll let you go and dash. Rajesh, thank you so much for joining us today on ET Now. But with this, viewers, let's move on, and it's time to highlight today's breakout and breakdown counters. Firstly, let's have a look at one of the breakout candidates from the large cap space, that is Titan on the charts, because interestingly, when the markets were weak, this stock was actually moving way above and was seen to be outperforming the markets clearly, and today is seen to be forming an interesting technical pattern, that is a W pattern. This was a resistance level, and from these levels we have seen the stock to be breaking down, but for now the stock is making this particular pattern and now seem to be breaking out above its key moving averages. It's trading above its 200-day, 100 as well as 50 and 20-day moving averages. So this is the breakout candidate for you. And but on the flip side, let's have a look at today's breakdown counter. IT Pack was clearly under pressure in today's trading session. From that, have a look at Persistent Systems. This particular stock is now sitting at its 5-week low. From the past 5 consecutive weeks, this stock is under pressure, is seen to be trading below its 220-day moving average. And not just that, if you look at the declines that has been what you are seeing for today decline, that is after making an insight candle for the past 2 days. So that is the technical setup for Persistent System, and clearly we are seeing a breakdown on this particular counter.
Okay, time to move on and get you the word from the wise. We spoke earlier today with A. Bala of Aditya Birla Capital, and he believes that domestic consumption is better placed at least than the export-facing sectors. Listen in.
I think domestic consumption looks like one is in the uptick, and second is the per capita income levels in the country, which has been rising. Definitely, I think will lead to an increase in consumptions. And this time, the rabi crop season has been far superior compared to the last few years. Therefore, the rural economic activities, I think, likely to generally speak up. Therefore, I think the downside risk on the consumption side seems to be limited, and probably would have a positive outcome coming from the segment. From IT as a sector point of view, I think we have to look at it into exports in two parts. One is IT exports and second is non-IT exports. Clearly, the IT remains a central part of the global market. Balance sheets are clean and stocks have corrected. And globally, I think all technology companies corrected quite significantly. And I think Indian IT companies also got corrected quite significantly. Therefore, the valuations become attractive. And the clean balance sheet, very high cash levels in the books, and high dividend distribution track record and so on and so forth. Therefore, that segment could also play in our own belief is as a contra play.
Okay, on that note, we'll slip into a very short break. Don't go anywhere. Lots lined up when we come back.